Hello, welcome back to the show. So in today's video, I'll be talking about United Healthcare stock. United Health is crashing around 15% just today. So in today's video, I'll be covering a few things. We'll be covering United Healthcare stock crashing and what to do and ask yourself when your stock crashes, some valuations on United Health, how to react when your stock crashes, as well as some questions that you guys have left me in the comment section below. So let's look at the healthcare insurance space today. So the healthcare insurance space today is basically in deep red today. So you have United Health down around 15%, Elevance Health down 7%, Humana down 7%, Centene down 5% as well, Molina Health, Cigna, all these different healthcare insurance stocks are down massively today. And why are they down? Because of United Health. So United Health, what they did was this, they replaced their CEO. So they replaced Andrew Whitty with this guy over here called Hemsley. They suspended the 2025 outlook guidance as medical expenditure expected to be higher than expected, and the company is expected to have growth in 2026. So it is likely that 2025 will be a down year for United Health over here. So this is United Health statement over here. So United Health today announced the appointment of Hemsley as CEO effective immediately following Andrew Whitty's decision to step down as CEO for personal reasons. Hemsley served as the company CEO from 2006 to 2017, will remain chairman of the company's board of directors, and Whitty will serve as an advisor to Hemsley. And this portion over here is just them thanking Whitty. And then over here they say additionally, the company suspends its 2025 outlook as care activity continued to accelerate while also broadening to more types of benefit offerings than seen in the first quarter, and medical costs of many Medicare Advantage beneficiaries new to United Health remain higher than expected as well. The company is expected to grow in 2026. So for United Health over here, they had a call as well, and this is what I gathered from the call itself. They said that they had increased utilization in Medicare, similar to what they said in their press release. They cited increased cost, especially in the Medicare Advantage sector. They are saying that the challenges are largely within their control and they'll be increasing their bid in the Medicare Advantage plans that the government gave out in 2026, which is coming out in a few weeks or so. So this is United Health's new CEO. United Health's new CEO is this guy called Hemsley. Hemsley, he served United Health from 2006 to 2017, negating the '08 crisis, Obamacare drama, and all the crises that we had in the 2010s. So he took United Health from a small insurance company to a $400 billion market cap company, which is similar to what it is at today. So here are my thoughts on United Health. So since the earnings call itself, a few things have changed. So number one, United Health, they lowered their guidance. And number two, the CEO actually stepped down. So if you're to look at the guidance itself, the guidance dropped by around 15 to 20%. But if you're to compare that to the stock price itself, the stock price has nearly halved since pre-earnings. So the stock price is now down around 46% since before earnings. And for a Dow Jones company like this, it is incredibly remarkable for a company to halve its market cap over here. So this is what to ask yourself when a stock falls 50%. Ask yourself, has the thesis changed? Is the company committing fraud and structurally weakening? Or is this a sentiment and a temporary issue? So for United Health over here, if you think they're committing fraud, if you think they're having fraudulent activities in terms of your Medicare Advantage portions over there, then you shouldn't be investing in this business. But I take the other side, they've won a case against the DOJ just 1 month ago, and I don't believe that they're committing fraud in any way, shape, or form. So here are some developments for United Health as well. So this is one of the first catalysts for United Health over here. So back in April the 7th, US health insurers jumped as 2026 Medicare payment rates exceeded expectations. So the Medicare plans came out at 5% higher than in 2024. So the 2026 Medicare Advantage bids are coming up and they will likely bid for higher prices to cover all the costs that they're having this year as well. So 2025 will be a down year, and then in 2026, they're expecting to resume back to growth. So for United Health over here is another development as well. So Trump, he recently signed an executive order. What he did was he tried to cap all the different drug prices in the US itself. So in the US itself, the drug prices are 10 times higher than in countries like Europe and China and so on. And Trump, he basically signed an executive order to cap those prices. So that could be a catalyst for all your insurance companies as well, simply because your drug prices, they take up a large proportion of their cost of goods sold over here. And so when the drug prices come down, then their margins will improve over time, and this will lower the cost for all your insurers over here. Next development for United Health over here is the two other companies, so Elevance Health and Humana as well. Elevance Health, back in Q1, they beat their earnings expectation and they beat their full year guidance expectation as well. So Humana as well, they beat their earnings expectation and then they missed their revenue by just a fair bit, and they're guiding for higher than expected earnings per share growth this year as well. So if you were to consider all the different sites over here, this looks like it is a United Health specific problem. It is not a problem that is widespread, meaning to say it is not a problem that all your different other healthcare insurance companies are experiencing. This is a problem that is specifically for United Health over here. So for United Health over here, the timing of all these different things coming together has created a compounding effect that has caused the stock to nosedive. So currently now down 50%. And one must weigh the possibility of fraud against the undervalued nature of the stock right now. So if you think the company is committing fraud, if you think the company is overcharging on Medicare, then you shouldn't be investing into this stock. But for me, again, I don't think they're doing that. They are a $400 billion market cap company over here. If they're committing fraud at such a high level over here, and with the new CEO taking over as well, I don't think he'll allow any such activities coming up as well. So here are some of my thoughts for United Health over here. So the new CEO coming in before the Medicare bid is better than after if it was going to happen. So if the CEO was always going to change, then it is much better for him to be coming in before the Medicare bid than after the Medicare bid because he can push up the prices and attain more revenue for United Health over here. Next one, Andrew Whitty was likely fired. He had multiple cases under him. So he had the cybersecurity issue, he had a fraud case, he had insider trading, he had the Luigi case as well. So he's likely just a scapegoat to basically remove the scrutiny for United Health over here. So the new CEO, Hemsley, knows what is going on and he's saying that the problems are under their control. And this new CEO over here, he knows what's going on and he's saying that most problems are under their control. It will likely resume back to profitability in 2026. So for United Health and Hemsley over here, Hemsley brought United Health through the great financial crisis, Obamacare and all the small crises along the way. 20% lower guidance and 50% sell-off in the stock price seems a bit of an overreaction. It seems like an opportunity at this price. All this time with the Luigi case as well, seems like United Health are giving out more claims to avoid scrutiny. So back in 2024, the CEO of United Health, he got shot by Luigi and that led to a lot of scrutiny on this company over here. And so my belief is that the company is trying to basically give out more claims so that there's less scrutiny on the company. But over time, all these things will heal. The products that United Health sells is a necessity for all your different US citizens over here. So this is United Health's valuation. So currently now the stock is trading at 13 times earnings and the mean PE over the past 10 years or so is around a 20 times earnings. And currently today it is down around 16%. So for United Health over here, their previous EPS guidance was around a $25 GAAP EPS. And assuming it goes down to around $23 in GAAP EPS, lower than what it was in 2023, and assuming a mean reversion of valuation to around 18 times earnings, that will be a $414 stock over here. If it's a 20 times earnings, then this stock over here will be trading at $460. So you can clearly see that there is some sort of undervaluation over here. I view United Health as extremely undervalued right now, around a 30% undervalued. So my thesis for United Health hasn't changed. It's almost like a recurring revenue software business. And until I see a significant decline in terms of the insurance takers, meaning to say the people that sign up for insurance in United Health, I won't be selling this stock. They recorded a 750,000 increase in their Optum Health members just last quarter. And if they continue doing so, then I don't see how this will affect the fundamentals of the business. So healthcare in general, I don't really like investing in healthcare simply because of the scrutiny for this one. But for United Health over here is a special case because the company is significantly undervalued. So for United Health over here, they are facing a sentiment pullback. Healthcare insurance is a necessity in the US. And if you were to compare healthcare insurance to, for example, your branded goods, your luxury products, or your food companies, all these food companies, they can be easily boycotted by consumers. But for healthcare itself, healthcare cannot be boycotted by consumers simply because it is too important for all the livelihoods of the US citizen over here. It is a necessity. So this is what Warren Buffett had to say about stocks when it crashes.
To them. I mean, the main thing to do, and you're not going to pick the bottom, and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, have it go down 50% or more, and be comfortable with it as long as you're comfortable with the holding. And I pointed out, I think a year, maybe 2 years ago in the annual report, just the one before this most recent one, I pointed out that there have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred. But if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, how can you stay with that when something else is going up or anything? Really, you've got to be in the right psychological position. And frankly, some people are not really careful. Some people are more subject to fear than others. It's like the virus. It strikes some people with much greater ferocity than others, and fear is something I really never felt financially, but I don't think Charlie's felt it either. But some people can handle it psychologically. If you can't handle it psychologically, then you really shouldn't own stocks, because you're going to buy and sell them at the wrong time. And you should not count on somebody else telling you this. You should do something you understand yourself. If you don't understand it yourself, you're going to be affected by the next person you talk to. And so you should be in a position to hold. And I don't know whether today is a great day to buy stocks. I know it will work out over 20 or 30 years. I don't know whether it'll work out over 2 years at all. I have no idea whether you'll be ahead or behind on a stock you buy on Monday morning.
So for Warren Buffett over here, he's saying that whenever a stock drops 50%, you shouldn't be emotionally attached to the stock itself. You should think of it from a rational perspective. And for United Health over here, if you think that it is a strong company that is able to compound over the next few years or so, then this 50% drop that it just had shouldn't be concerning at all. In fact, it should be an opportunity for you to add into your position. I've been adding United Health slowly over the past few weeks, ever since it had the 20% drop, and I'll be continuing to add this one over here. It's a company that is extremely durable with solid fundamentals over the past 10, 20 years or so I don't expect it to go anywhere anytime soon. And that's why I'm investing into this one. Last portion over here, I'll be talking about some questions that you guys have left me in the comment section below. So the first question over here, it says, would Nintendo fit your description of a moat? Besides the fact it's highly overvalued, it seems to fit. So for Nintendo over here, the main portion of their sales is actually from gadget sales as well as game sales, and some cards as well, so like their Pokemon cards and all that. So for Nintendo over here, I don't understand the industry enough, because gaming itself is an industry that I'm not super interested in. I mean, you have companies like Take-Two, for example, releasing GTA and holding back the release for the past 6 years already, and then the fundamentals of the business itself is also deteriorating. So you could see something similar to Nintendo as well. In the gaming industry, I think Nintendo is one of the biggest one out there, apart from Tencent. So it's normally Tencent, Nintendo and all that. But for the gaming industry, I'm not super interested in it, simply because there is no secular growth trend in this. So for example, in Australia, in China itself, they've been regulating gaming. And if all these regulations come in whereby people stop gaming and people start transitioning to using social media apps, then you could see a decline in gaming revenue for all these different companies over here. But for Nintendo, it is simply a company that is outside of my circle of competence. I don't think I would like to own a company that is selling gadgets. I mean, I own Microsoft. Microsoft sells the Xbox gadget. And so for me, I would stay out of this one. Next one. Thoughts on Apple now that we may be switching to Boo. So for Apple over here, what he's basically asking is whether or not Apple will basically skyrocket in stock price today. So for Apple over here, I view it as a company that is sort of like in its peak of growth, meaning to say it is too big, and that is the problem with the business. It is too big to continue growing. It is too big, and that's why the growth is slowing. Basically, they are a victim of their own size. So it is similar to Berkshire over here. Berkshire is too big to continue growing at 15-20% compounded annual growth rate. Same thing for Apple over here. Apple is currently growing at around 5-6%, 2-3% in terms of revenue growth, and then 3-4% in terms of buybacks. That's where you get your 5-6% over here. But for Apple over here, I think it is a company that is trading at too high a valuation. And for me, the predictability of the business is there for sure. But I don't want my companies to grow at 5-6%. I want my companies to grow at between 10 and 20%. That is normally the sweet spot when it comes to owning your stocks today. And that's why you're seeing Warren Buffett basically selling out all his Apple position. He's halved his Apple stake since, I believe, 1 year ago. And he will probably continue to do so if the valuation continues to go up and if Apple growth starts to stagnate over here. So for Apple, of course, the stock price can appreciate, but from a fundamental perspective, this stock is not growing as much as I would like it to be. In the tech space, there are other gigantic companies like, for example, Microsoft. Microsoft is growing revenues at around 14-15%, whereas Apple is growing revenue at 2-3%. So Microsoft is clearly a better bet in that space. Same thing for Amazon, same thing for Google, same thing for Meta as well. All these different Mac 7 tech companies are much better bets as compared to Apple over here. So for me, I wouldn't invest in Apple. In fact, I sold my Apple last year as well, and I won't be buying into this one anytime soon. Hopefully you guys have found this one useful and invest safe.